The Nasdaq 100 has just entered a technical bull market, meaning it's rallied 20% from its cycle low. So does that mean it's entered a proper bull market, or is this simply a bear market bounce? So we're looking at the daily close line chart for the Nasdaq futures market, and it shows how long it took to go to the bear market compared to the bull market. And when the market topped out in December, it took 75 days to be confirmed as a bear market. I think 2 days later, we actually saw the actual low. And then it only took 23 days for the Nasdaq to enter that bull market. And that's interesting because it took less than a third of the time to confirm the bull market than it did the preceding bear market. To me, that would strongly suggest we've seen quite a significant low. But there's a problem. Bear markets are notorious for bear market bounces, and that is where we see a very strong rally convincing investors that the worst is over, only to see them jump into the trade and the market rolls over and hits new lows. Which one are we looking at? Well, I think we look at positioning, there's a few clues. So this is the weekly futures chart with net long exposure for asset managers, and that net long exposure actually topped out 15 months ago. So reducing long exposure is not a new idea on this trade, and by recent standards, net long exposure is quite low. So in some ways, that's already at a sentiment extreme. If you zoom in, we'll see that gross shorts have actually been moving low over the last couple of weeks after trying to rise higher. So investors were already stepping away from shorting the Nasdaq 2 weeks ago, and that's really before we've seen recent headlines come out of the US-China trade talks, which is overall a net positive. So I do have a sneaking suspicion that we're going to be seeing asset managers increase their net long exposure in the coming weeks or months, and that could see the Nasdaq hit a new all-time high. So we can see we had a false break of 17,000 on the 7th of April, and that marked the cycle low. There was, I believe, one of the best days in recent history on the Nasdaq on the 9th of April, bit of a pullback, and now prices are trending higher. There's two gaps as well. A breakaway gap, which tends to happen at the beginning of a move, and then a runaway gap, which tends to happen around the middle of the move. Now, if that is correct, that would suggest a move up to around 25,000. But what I also like about this gap is how the low of the day was the open, and it continued higher. So I think we've got a reasonable chance, as long as we don't close that gap, it is going to break above the 21,000 area. The only thing is that there is a bit of a pivotal resistance level here based on weekly levels at around 21,200. The weekly RSI is also in the overbought zone. And this is not a new move, so it wouldn't surprise me too much if we get a bit more of movement up, a bit of prattling around and a bit of a pullback. But I'm hoping that we do hold above that gap area, break above it, then head towards 22,000, of course, at the record highs. Now, I don't know if that's going to happen for certain, but overall, I think odds favour the market continuing higher. But if we are in a bear market bounce, typically speaking, you should expect a sharp reversal at some point, and that would clearly change the picture quite quickly. So for now, I like the idea of looking for dips and looking for an attack to that new high. As always, hope that's useful. Wish you best of luck with your trading.